This is the Investor Mindset Podcast.
And I want to say there's really nothing wrong with residential real estate. This isn't a, commercial, the best. Residential, you're wasting your time. Not at all. I mean, in fact, I do think it can be a great place to get started. I mean, that's how you got your start. That's how I got my start. We know plenty of people that still make great money investing in residential real estate. I just think that there's a much more scalable model. Residential, cost of entry is lower, but there's creative ways to get into commercial real estate with a low cost of entry as well. You just got to be a little bit more strategic in doing so. Residential's got, amazing financing terms, but there's limitations to that as well. Right. And so again, I definitely don't want to pound on residential and say, waste your time, don't consider it, yada, yada. That's just not.
I want to pound on it for a second. I mean, look, I think
you go ahead and pound it. I'm going to stand up for both.
But I think it's great. I think it's a great option. But once you understand that it's an entry point, unless it's much harder to build a business that's scalable on single family. It's just really difficult to do something when a property is so different over and over again. It's great for like the onesie twosie, but it's hard when you're talking about going and buying 100 or 200.
There you go. You hit the key word there, scalable, right? And you had a booming business, again, 75 homes a year. That gives me a headache as well. It's just, that's a lot of flips. That's a lot of project.
I'm still recovering from it. The coaches, the therapists, it's like you got to work through that trauma of dealing with that many house flips.
Yeah. And so, and that was probably a tough go. You managed a lot of those roles when you're the first couple of years and just really challenging to hire people when you don't have a lot of revenue coming in. Right. And so one commercial real estate deal, again, you could go out and buy a $10 million property. And just from the asset management fees alone can probably justify being able to hire some additional staff, maybe an assistant or maybe someone else in your team that can help start taking those responsibilities away from you. And so buying 2-3 commercial deals, you might have an entire team underneath you now that allows you to focus on what your best skill set is. And maybe that's raising capital. Maybe that's finding deals. Like you don't want to spend time in the minutia, behind the scenes, the operational side of the business. You want to be out there doing what you're the best at, whatever that might be. And so I think you can get there a lot faster by buying larger assets, i.e. commercial real estate. In addition to that, it's, I'd say that, and again, there's many different asset types that fall underneath the commercial umbrella. And so I want to make sure that there's no confusion here. And so multifamily, I know that that's the space that you're in, Stephen. And so I'm going to take that out of the equation for this particular part of the conversation. And, the remainder of the asset classes, most of them, again, industrial, retail, office, hospitality, yada, yada, yada. I mean, like there's a lot of other ones there. For the most part, hospitality is a little tricky right now with COVID, right? It's one that's been impacted fairly significantly. But generally speaking, if you're buying a prime piece of real estate, you're getting a much higher tenant base that you're dealing with in those types of assets I just mentioned. And lots of times you're getting longer term leases as well. You're not necessarily doing just a annual lease. These are 5, 10, 15, sometimes 20-year leases. There's an opportunity to buy properties that are on triple net leases, which is literally about as passive of real estate that you can have. So you can have really high quality tenants that have incredibly long-term leases, and they're triple net leases. Again, that's just one type of commercial real estate investment, but like that, those types of investments are about as passive as real estate becomes. And so again, just many different ways to skin the cat with commercial investments. And I think it allows you to get bigger much faster and hire the team, right? Hire the team that's necessary to operate your business. It doesn't have to be a huge team, but hire those necessary skill sets that allow you to not have to grind at 50, 60, 70 hours a week to give you the freedom, give you the lifestyle that you so choose.
Yeah, I think that's such a great way to put it, Kevin. I couldn't agree more. It's interesting because, single family people need to live in homes, and even big companies like Blackstone and some of these other invitation homes have found a way to scale buying single family homes, and they're creating a profitable model. And so it's absolutely doable. But when you go into something like you're talking about on the commercial side, non-residential, there's some big advantages. I'd love to hear about what are some of the advantages in your eyes of going after something like a triple net or an industrial or one of these types of properties that are different than what a lot of people think of when they think of real estate, and just kind of compare and contrast, because I know you've invested in quite a few different things.
Mm-hmm. Yeah, no, I think I just mentioned a couple of them. So, using the a triple net, and that could be a retail triple net, or that can be an industrial triple net. I mean, both of them are, commonly have triple net leases in place. And again, I think one of the big ones is the quality of the tenant. Instead of having a individual that's, working a job, renting a home from you or an apartment from you, that if they lose their job, they're not going to be able to pay their rent. And you base it on credit scores and things like that as well. But with a commercial tenant, again, maybe it's a Walgreens, or maybe it's another national brand that's in a retail location that you have, or if it's on the industrial side of things, it could be a Fortune 500 company, a large manufacturing company. But basically, you're dealing with, most of the times, you're dealing with a higher class of tenant, someone that's going to have a corporate guarantee in place, which gives you much needed security on that lease agreement. Because again, these leases are, can be as short as 5 years, and I've seen leases as long as 25 years. And in that scenario, again, just you're dealing with, Betty and Bob that are renting the apartment, have a job, the chances they might lose their job, versus you're dealing with the Walgreens on the other side. And so I think that there's, the risk associated with one is much greater than the other. So yeah, one could also argue the point. I can argue from both sides of the table, and that's why.
Let's hear the cons too. What's the downside of that, and how do you overcome it?
Yeah, so I'll give you a great example of the downside. So getting locked into a 10-year triple net lease, most of these leases have annual increases or escalators in them, and most of the time, if it's not directly tied to CPI, a lot of times it's just a percentage. If it's a smartly written lease, then it's actually tied to CPI, which obviously there's some changes that can occur. It can kind of ebb and flow with CPI. And so right now, with this high inflationary environment, one could argue that if you've got a triple net lease, even if it's with a Walgreens, that's great. And you've got 8 years left on a 10-year lease, but the annual escalators are only 3%. Well, you and I both know that inflation, no one knows what the real number is, but one could argue probably that it's double digits, right? And so you're actually losing out in that scenario, being the landlord, because you're locked into this lease. It can't be changed. Now at the end of that term, you can ultimately reset. If you're going to sign another lease, whether it be with Walgreens or another credit tenant, you can obviously reset it to whatever market is at that point in time, and hopefully start trying to recapture some of that value that you lost over the years. But in a residential scenario, you've got annual leases. Assuming you've got annual leases, some people have month to month, but in a normal sense, you've got an annual lease. Guess what? You can reset that rent to market, which we know has been happening a lot over the past year or two in the apartment space, in the single family rental space. And so you're not stuck into that long-term lease that doesn't allow you to capture, inflation, which is, again, just running rampant at this present time. So again, kind of pros and cons of both. Again, that's why this isn't a one's better than the other. However, I do think that, again, commercial is a much more scalable option. Going out and buying $10 million worth of commercial real estate is a much easier feat than deploying $10 million of equity into single family homes, going out and trying to buy a package, or, assembling a package of single family properties. And then in addition to that, the management inefficiencies that exist with the single family, buying a bunch of single family homes, that even if they're, in the same area, if they're within a couple miles of each other, the inefficiencies are real, and they catch up to you fairly quickly.
Wanted to pause from today's conversation to share something that's been heavy on my mind as I'm talking with investor after investor, and I continuously hear this concern. It's the concern about inflation. We've seen some of the highest inflationary periods in the last 20 years, up 7.5%. Some believe inflation is actually closer to 20%. But what does that mean for you? Well, at the core, it means when money is sitting in your bank account, or it's not in assets that are hedging against inflation, that you're actually losing buying power. So what does that mean? It means other things around us are getting more expensive, and the dollars that are sitting in your bank account are becoming less valuable. So what do you do about it? Well, one of the best hedges against inflation is investing in real assets, specifically real assets like multifamily. And why is multifamily so powerful for hedging against inflation? Well, we've put together a phenomenal 30-minute, purely educational webinar to be able to share with you why multifamily is such a powerful opportunity right now, why it makes sense to invest in a very hot market because inflation is so much hotter, and exactly how you can get involved. Now, if you're interested in learning more and educating yourself and potentially having the opportunity to get involved and actually hedge against inflation yourself, then I encourage you, head over to investormindset.com/start. That's investormindset.com/start. And you can register for this 30-minute presentation that's going to be able to bring you through all of the reasons that you need to know and understand to avoid some of the biggest common pitfalls when it comes to investing, while also setting you up to invest to hedge against inflation through and through.
Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share it with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.